Hello and welcome back to the Winery Academy YouTube channel. I'm Michelle, and in today's video we're going to be chatting about winery accounting. Now, tracking your winery's performance is the foundation of running a profitable business and ensuring the longevity of your company. But without careful planning and accounting, the cost of making wine can get out of hand pretty quickly and cut into your profit margins. It's for this reason that it's imperative that you understand and track the production and profits of winemaking. So simply put, the cost of wine is determined by how much you can charge your consumers for your product and how much you need to spend in order to make and sell the product. Now, the cost of wine is largely determined or dependent on your market, so this does leave little room for expanding profits in this area, but you can control or exercise control over your production costs, which includes costs such as labor, materials, and overheads. And this is where winery accounting comes in, because winery accounting can help you find lost opportunities for profit within your production costs. So what are some of the challenges faced when trying to lower production costs? Well, it's not as simple as just deciding to spend less money, because there will always be the cost of doing business. So finding where you can reduce costs will take time, thoroughness, and consistency. By working diligently with a winery bookkeeping professional, you can discover your best path forward. You'll need to decide on how much you are going to spend on production overall, and this will include making decisions on how much to spend on things such as grapes, glasses, labels, and closures. Then you'll need to decide how much money you're going to allocate between the different departments in order to run the business and sell your wine. You have to track the costs of your winery throughout the process, and this can be particularly difficult due to the overlap of your overhead, production, and material costs. The last point to highlight here is that it's absolutely key to track your inventory movement, and this will include keeping tabs on what materials and labor went into creating specific vintages and blends. Now let's take a look at the basics of allocating costs. So beverage industry accounting breaks down the costs into two main groups. These are known as your cost of goods sold, or COGS as it's commonly referred to, as well as the cost of goods produced. So when looking at the difference, your cost of goods produced refers to the costs associated with wine in the process. And this includes ongoing costs related to grapes or juice, labor, overhead, dry goods, and bottling. By contrast, your COGS, or cost of goods sold, refers to all the costs incurred per bottle of wine sold. This can be attributed to the cost of goods produced of particular varietals or vintages sold, and include costs in selling wine and getting the wine to your customer. Now, knowing the COGS is essential if you want to know your gross profit that you make on each of your different wines. And you can take the price of a sold bottle and subtract the COGS in order to determine the gross profit that you've earned. Lowering your overall COGS will help increase the business's profit margin, but there are plenty of considerations to carrying out this successfully. We then move on to the major categories of winery costs. So to make matters simpler, winery costs are broken into specific cost categories according to the steps in the winemaking process. Now, there are three main steps, which are crushing and fermenting, barrel and cellar aging, and bottling and labeling product. Each of these steps can be broken down further, and at each stage of production, there are costs for materials, labor, and overhead. If you own both a vineyard and winery, vineyard accounting reports should be included in these costs. By tracking your investment and usage in these aspects of production, you will begin to sort of ascertain or develop a more accurate idea of the cost of goods produced for the wines that you sell. As we delve further into the complexity of winery costing, it is important to remember that consistency is key. However you decide to elect how to track your production, it should be carried out consistently. So the first major category that we'll look at is materials. There are a variety of materials used in each stage of the production. This includes the cost of grapes, purchasing bulk wine and dry goods such as glass and closures, and specific materials are assigned to separate wines and must be accounted for at a SKU level. Up next is your labor. Now, labor costs should include any benefits, salaries and wages, and payroll taxes paid by the winery. If your facility has its own vineyard, then the labor expenses calculated throughout the vineyard bookkeeping should pool into the total labor costs. You must pay all workers involved in the facility, whether it be maintenance, production, winemaking, and bottling. It can be more challenging to figure out the labor costs for owners and executives because these people are often more likely floating about between different departments and also assume an administrative role. Most often, though, a portion of the profit from each department that these individuals work in or attend to regularly will be pooled in order to provide a total salary. Last up, we have overheads. So winery overhead costs include rent, depreciation of owned property, building insurance, repairs and maintenance, property taxes, cleaning supplies, and general services needed to maintain the quality of the facility. Of course, you do get expenses that will need to be shared between departments for facilities, equipment usage, and utilities. And some businesses do struggle when it comes to accurately dividing the costs amongst the different departments. But it is common practice to divide facility costs and insurance costs by looking at the square footage of each department. Now, navigating the breakdown of costs is certainly a complex practice, but developing and maintaining a consistent system is key. Over time, a good system will evolve and accommodate the nuances of increased production as your winery expands. Now that we've looked at the costs associated with the winemaking process, we move on to the methods of inventory accounting. So tracking inventory presents unique challenges to wineries that a lot of businesses in the beverage industry don't have to contend with. Due to the aging process of wine, there is a significant lag between when the product is produced and when it is sold. And this can be especially challenging as winery inventory accounting may stretch over several years for each vintage across all stages of production. There are four main approaches to navigating this hurdle, so let's take a look at those. First up, we have the FIFO method, or first in, first out. This is one of the most common methods, and it assumes that the oldest materials are sold first. The next method available to you, which is also the preferred method of accounting, is specific identification, and this depends on tracking specific grapes, materials, and packaging through the production of each wine. The third method is last in, first out, or LIFO, and this is relatively uncommon since it assumes that the newest materials are used first. And this brings us to the fourth method available to you, which is the average cost method. And the average cost is a system in which all purchases during a set period of time are assumed to have an average cost. Once you've tracked all of your costs by wine, department, and stage of production, this information must now be put into financial statements. These are kept as part of your financial record to continue tracking the ups and downs of production and profit. You can reference these as often as is necessary to identify patterns and lost opportunities for profit, and most wineries develop a flow of financial statements. The labor, materials, and overheads of earlier stages often transition into the later stages of production, and tracking and grouping these costs can help identify how they compound throughout the winemaking process. All of this information comes together to reveal a complete picture of where every dollar within the business goes. As always, we trust you found this video insightful, and should you have any thoughts, comments, or suggestions for future content that you'd like to see, please feel free to pop it in the comment section below. Please also join us on our social media platforms, including Facebook and LinkedIn, or at our website at proteafinancial.com. Protea Academy, striving to achieve better accounting for everyone.